let's get to another corporate conversation. Bank of India is on our radar on the back of its Q4 numbers. Gross NPA ratios have come in at a 32-quarter low. The net interest margin has improved on a year-on-year basis, but it's down on a quarter-on-quarter basis. Business momentum has been fairly strong. To discuss more, we're joined by Rajneesh Karnatak, the MD and CEO of Bank of India. Mr. Rajneesh, morning. This is Reema here. First, while your numbers look good on a lot of parameters, as I said, your gross NPAs have come down. Quarter on quarter, it's lower by 3.1% in absolute terms. Your net interest margins have improved on a year-on-year basis. But can you explain the slippages, sir? Your slippages are doubled on a quarter-on-quarter basis to 2,625 crore. What led to such a high slippage number? Was there one, two large accounts? And if you could give us a sectoral flavor on the slippages and the way forward.
Yeah, good morning. So on the slippages side, let me clarify that in Q4 there were certain slippages, as you stated, but the slippages were not lumpy slippages of any corporate accounts, but they were slippages of the agriculture sector. So we had certain agricultural slippages, pan-India, not to particular geography or state, but pan-India certain slippages on the agriculture, and predominantly the fresh slippages in Q4 were of the agriculture sector. But however, if you see our gross NPA, it has come down to 37,000 crore, which was 38,000 crore in March, which was 38,000 crore in December 22, and net NPA has also come down to around 7,000 crore from 8,000 crore plus. So in the percentage terms also, the gross NPA has come down to 7.3% and net NPA has come down to 1.6%. So on the guidance side also, we are hopeful that the slippages will come down further in the March 24, both gross NPA and net NPA wise. And as far as our strategy is concerned for the slippages side, we are very hopeful that the gross NPA and net NPA will come down in March 24 for the simple reason that we will be very aggressive on as far as the recovery will be concerned. OTS would be there. There will be a lot of stress on upgradation of the NPAs which have gone down. So we are very much already there in the field for all those agriculture accounts which have slipped in Q4 quarter. We are hopeful that quite a few number of them will get upgraded in this quarter also. Apart from that, we are also having a strategy as regards to the reducing the fresh slippages, and the slippage ratio should also come down in this FY24. And then there will be certain write-offs also as a part of a strategy. And overall, the gross NPA and net NPA will remain on a lower side for financial year 24.
Right. You've given us a lot of directional cues, Mr. Karnatak. Just wanted to understand quantitatively, what kind of upgrades do you anticipate coming in from agricultural sector in the next couple of quarters? You said your slippage ratio will reduce. So currently it's close to around 2.16% if I annualize your last quarter's slippages. What is that likely to be? And on your asset quality itself, your GNPA is already at a 32-quarter low. Your net NPA is close to 1.66%. So what are your targets for FY24 on recoveries, on slippage ratio, as well as GNPA and net NPA?
Yeah, so as far as the agriculture sector recovery which you asked was, so we are anticipating at least 1/3 of these agriculture advances which have slipped, we will be able to upgrade them. So there is little bit stress over there, but we are very hopeful. The field is already on the job. So we are going for the customer connect, meeting all the farmers and other places pan-India. So 1/3 of the slippage which has happened, we are hopeful that we will be able to recover and also contain the agriculture slippage in the going forward quarters. As far as the large lumpy slippages is concerned, there is no more large lumpy slippages with us. And gross and net NPA, as you rightly said, that we had, I am giving a guidance of 6.5% of the gross NPA for March 24 and a better net NPA also at around 1.3, 1.40 for March 24.
An annualized slippage ratio you said would be how much?
So annualized slippage ratio will improve by another 20 basis points.
All right.
Got that. So what were the slippages in the month of April and the first week of May?
So that data we have not
no, we just want to know.
So I would not be able to give a number at this point.
But just in the immediate term, are you seeing, what are the slippages looking like, say for the current quarter, Q1, FY24?
So not much of slippage would be there. Whatever the slippage happened in Q4, it will be lesser than that.
So can we go back to the run rate of 1,200, 1,300 crore?
Yeah, somewhere around 13 to 1500 crores.
13.
All right. Just to follow up on the previous one, you said that 1/3 of the agri advances which have slipped will see some upgrades. Just wanted to understand what proportion of your agri advances slipped in the previous quarter?
So it was around, so whatever the slippage was, around 50% of that was agri advances only. One of the main reason was that renewals were not done in those agri advances. So we are very sure that once we are meeting the customers, the agriculturists, the farmers down there in the fields, we have 5100 plus branches. Many of them are rural and semi-urban branches. So we are meeting the customers.
Okay, we've lost that feed with Bank of India, but I think the key takeaway is slippages this quarter, 50% has come in from agri.
Yep.
But a bulk of the large agri slippages appear to be behind. They will get back to that run rate of 1,300 to 1,500 crore rupees. And they are looking to improve the asset quality. And he's given some important numbers there.
He has given some important numbers. In fact, he said that the annualized slippage ratio will improve by about 20 basis points. A third of the slippages will actually, turn into upgrades. And GNPA, 6.5% by the end of this year. And net NPA will be around 1.3% by the end of the next financial year as well. So gross NPA was close to around 7.3%, sees an improvement of almost 80 basis points through the year, and net NPA sees an improvement of closer to 40 basis points. I believe we are trying to re-patch that connection with Mr. Karnatak, but until then, we've got some of the information. We needed to know a lot more about their NPA, or rather their NIMs, and the loan growth that they're targeting next year.
Because this is one of the few banks where the NIMs has actually contracted on a quarter-on-quarter basis. Most other banks have reported a NIM expansion sequentially, and for many banks, the NIMs are at record high levels, or at least multi-quarter, multi-year high NIM levels. And of course, we wanted some more color on the loan growth as well going ahead. But get into a break now. We'll try and reconnect with Bank of India. On the other side, we'll also invite Rahul Mohinder to talk about some technical trades.